Let's get straight to it. XRP could disappear from exchanges within just a few years, possibly by 2030. That's not a metaphor. According to Edoardo Farina, the founder of Alpha Lions Academy and a well-known XRP community figure, we may be heading toward a supply shock where XRP becomes nearly impossible to buy. Why? Because the amount of XRP held on exchanges is quietly dropping, and it's already happening right now. Farina believes this slow drain of XRP from centralized platforms could one day lead to a scenario where supply simply cannot meet demand. In his words, there's a possibility that the number of XRP tokens present on exchanges could drop significantly to the extent of disappearing. Now, this isn't just speculation. There's real data behind it. According to CryptoQuant, one of the leading crypto analytics platforms, Binance alone has lost over 82 million XRP tokens from its exchange reserves just this year. Back in January, Binance held 2.939 billion XRP. As of now, that number has fallen to 2.857 billion. That may not sound dramatic at first, but when you look at the overall trend and factor in long-term holding behaviors, it paints a bigger picture. Analyst EGY even confirmed last month that Binance XRP reserves have fallen to levels last seen in July of last year. In other words, people are steadily moving XRP off exchanges. Why does this matter? Because when people withdraw tokens from exchanges, they're often storing them in private wallets. That usually means they have no short-term plans to sell. Instead, they're holding for the long term. This behavior slowly reduces the available XRP for everyday trading. If this continues, and Farina believes it will, we could eventually reach a point where it becomes hard for new buyers to find any XRP to purchase at all. And that's what analysts call a supply shock. We've already seen a similar situation happen with Bitcoin. Recently, demand for BTC from institutions and ETFs has outpaced daily mining output. This imbalance has helped push Bitcoin to new all-time highs. The lesson? Limited supply, combined with growing demand, can drive prices significantly higher. Farina believes XRP could follow this same pattern. To support this theory, let's look again at the numbers. After reaching a peak of 3.040 billion XRP on Binance on January 16th, right when XRP hit a 7-year high of $3.30, the reserves began dropping. That peak was likely due to people sending XRP in to take profits. But once the hype cooled, those tokens started leaving the exchange again. From January 16th to now, Binance XRP reserves have dropped 183 million tokens. And it's not just exchange outflows. Another factor that could lead to a supply shock is the ongoing XRP burn from transaction fees on the XRP ledger. Every XRP transaction burns a tiny amount of XRP permanently. Over time, this adds up. It's a slow but constant reduction in total supply that nobody can reverse. So even if XRP isn't pumping right now, currently sitting at around $2.28, down 5% from last week, the fundamentals may be setting up something bigger in the background. And some analysts are optimistic. Sistine Research, a crypto market tool, recently predicted a possible price run for XRP to a range of $33 to $50. That's not based on hype, but rather on potential supply and demand imbalances. Of course, not everyone is convinced. XRP hasn't exactly been explosive lately. Since dropping from its January high of $3.30, it's been stuck in the lower $2 range. Meanwhile, Bitcoin continues to climb, which has caused some XRP holders to feel left behind. But here's where critical thinking matters. Just because the price isn't moving doesn't mean nothing is happening. Farina argues that price action doesn't always reflect fundamentals right away. And he's not alone. In previous comments, he also emphasized that we will see higher XRP prices this year, and again pointed to the long-term impact of shrinking exchange reserves. So, should we expect XRP to suddenly disappear from exchanges tomorrow? No. But should we ignore the trend? Also no. If XRP continues to leave exchanges and institutional interest starts to grow, as it did with Bitcoin, the supply shock scenario becomes much more plausible. It's not about wishful thinking. It's about data, behavior, and history. At the end of the day, Farina's prediction might not be about when XRP vanishes from exchanges, but if people are paying attention before it does. Thanks for watching. If you found this discussion helpful, let me know what you think about XRP's future in the comments. Will it really face a supply shock? Or is this just another case of over-optimism in crypto?